when did institutional investors start becoming bigger players in the U.S. real estate market?
Sure. The long history of this is that rental houses, detached single-family homes in the suburbs, are a thing that have existed forever, pretty much. They were not owned by large real estate companies until the aftermath of the U.S. foreclosure crisis, when homes were very cheap and a number of Wall Street firms stepped in, sometimes buying homes with cash on the courthouse steps, and were able to start amassing pretty large portfolios. Post-COVID, when interest rates were cheap, when Sunbelt migration was the theme that everyone wanted to bet on, a lot more money came into this.
So, Kristen, Patrick seems to be identifying two pivotal moments in private equity and institutional investors' ownership and buying of single-family homes. There's the post-housing bubble, and then there's COVID. Can you talk a little bit more about sort of the evolution of this trend?
You see it happening really prominently in Atlanta and a few other Sun Belt markets, like Patrick mentioned. In Metro Atlanta, nearly 80,000 single-family homes are owned by large corporations. And that was a convergence of several factors. It was a perfect storm. Georgia has some of the weakest landlord-tenant laws in the country. That's important because until a year and a half ago, there was no state-level warrant of habitability law. That's pretty fundamental to rental contracts. Atlanta was hit harder than most metros during the Great Financial Crisis, but it's also grown more than many metros since then. So that's provided both the opportunity and incentive for institutional buyers to invest. And now in Metro Atlanta, more than 30% of the area's single-family rental properties are owned by large corporations. Charlotte and Jacksonville come close as areas with maybe 25% ownership share by large corporations. But no metro really matches what's happened in Metro Atlanta.